With issues related to clean energy and environmental factors increasingly being highlighted by major financial news publications, we've asked Sam Adams to join us to discuss sustainable investing. In a nutshell, we're going to look at what sustainable funds aim to achieve for a typical investor. Sam is the CEO of Vert Asset Management, whose real estate fund is used as part of IFA's sustainable investing portfolio implementation. Sam describes himself as both an environmentalist and a capitalist. As a longtime investment professional, including spending some 20 years with Dimensional Fund Advisors, Sam, you're an outspoken advocate for the power of the free market system of trade and finance. Can you please talk a little bit about your evolution as both a funds manager as well as an investor, which really began with your prior work at DFA, correct?
Yeah, exactly. I started my financial services career at Dimensional back in the early 90s. I was actually IFA's first regional director. I met Mark Hebner when he walked into the Dimensional offices way, so long ago. And back then, what we were doing at Dimensional was really working on a kind of revolution for investment advice and management for the individual investor. The index fund was about 20 years old back then, having been invented in the early 70s. And a lot of institutions had embraced indexing or passive investing, but it hadn't really reached the mainstream or the main street investor, the individual investor or the financial advisor. And so that's what we were working on then. And sustainable investing is kind of in the same place in terms of maturity. It was really ESG or environmental, social, and governance investing was invented around 2005. So we're reaching about 20 years old. A lot of institutions have embraced it. About a third of all professionally managed money is invested for sustainability, but it's still new to the individual investor. And so I moved from Dimensional to start my own firm at Vert Asset Management to do that, to help the individual investor and financial advisor start moving money into sustainability.
Sure. Sam, one of the problems with sustainable investing, of course, from a data perspective is there haven't been a lot of funds or a lot of research into sustainable investing in terms of performance, correct?
Yeah, I mean, because the field is so young and so new that we don't have 80 years or 100 years of data like we do, say, on the small premium or the value effect of those types of things. And, we're in this kind of problem with nomenclature, right? So the original sustainable funds were SRI or social responsible funds. A lot of those were actively managed. They were expensive. They were undiversified. They underperformed. Now we have more modern ESG or environmental, social, and governance funds. They're constructed better. A lot of them are passively or index managed. They have less costs. And so they do deliver the market rates of return, but it's really sometimes difficult because the industry and the media don't use those terms accurately to parse one from the other. So you really need to be careful in selecting sustainable investments to make sure you're getting something that's going to fit your investment program.
Sure. And then there's the whole issue with almost everybody these days is trying to hop on the bandwagon.
Well, yeah, this happened with indexing too, right? In the late 90s, indexing became really popular. Everyone jumped in, and then we had closet indexers, right? These are active managers pretending to be passive so they can get the performance, but then charging you high fees. Now we have, all these Johnny-come-latelys coming into the sustainable investing space, say, hey, it sounds like these ESG terms are attracting a lot of money. Let's launch some funds with those words in them or rebrand funds with those terminology and capture those assets.
How do you, with your fund, screen out the pretenders from the real sustainable investing?
Well, from my time with Dimensional and the fact that we still work with Dimensional, you won't be surprised by this, right? We reached out into the academic community. We found a couple of academics who spent their career studying sustainability in real estate, and that's the fund that we have, the Vert Global Sustainable Real Estate Fund. And working with them, we identified the most important issues and the issues that are material to the companies, right? They're important to us, but they're also material to the companies we're investing in. And by getting those metrics and those data sets robust, we know which of the companies are leading on sustainability and which ones are laggards on sustainability. And then we construct the portfolio to emphasize the leaders rather than the laggards.
Okay. And that's where capitalism and environmentalism comes into play, correct?
Yeah, I mean, capitalism does and it's the best tool we have at pricing things, at allocating capital, to, and getting our economy organized in a fashion that will maximize outcomes. But it doesn't do a good job of pricing things we can't put a value on, like human health or clean air or topsoil, those types of things we don't really have prices for. So this whole effort from our perspective is really an attempt to start getting capitalism to put value on those things so that companies and managers, when they're making investment decisions, are allocating to those things, right? We don't want to freely pollute because there isn't a price for that. We want to have mechanisms in place to do that. And when you invest for sustainability, you're really kind of sending a signal to the marketplace that you want capitalism and you want companies to start looking after people and planet in their pursuit of profit.
Well, that's what's so interesting about your fund. I haven't run across too many sustainable real estate funds that just focus in real estate. How did you get interested in real estate as a sustainable focus? And could you kind of explain a little bit about your process?
So the reason we started with real estate is when we started the company back in 2016, we went around to a bunch of investors and financial advisors that we knew, and we said, hey, if you're looking to do more sustainable investing, what are you missing? And 5 years ago, there was a lot missing, a lot of asset classes missing. There wasn't a single ESG or sustainable investment offering in the real estate asset class. So we decided to start with that. And like I said, we went right to the academic community and say, hey, what are the most important issues here? What are the material metrics? And we constructed the portfolio around that. Now, this is surprising to people, but buildings use 40% of the world's energy, create 33% of the world's greenhouse gases. So it's a huge determinant of the climate problem, right? But it's also a great solution to the climate problem because we know how to use less energy in buildings. We've got LED lights, right? We have better, more efficient air conditioning. We have insulation. We have better glass technology and smart sensors. So we know how to do that. Another crazy statistic is that humans spend 90% of our time indoors, right? So buildings have a lot of impact on our human health and our interconnectivity and our well-being. And so we want to make sure that buildings are healthy as well. And so a good example of a metric that hits on both of those is a green building certification. You probably heard of LEED certification or
Yes.
Energy Star certification. You get a building like that, you know that it's doing well for the people in terms of the health inside of the building, the air quality, et cetera. And it's also using less energy. So we tend to look for companies that are doing things like that, reducing energy, increasing their green building certifications, focusing on human health, those types of things.
Then do you invest in all the different sectors in real estate, such as industrial, office, leasing, all that?
Yeah,
that
absolutely. Remember that what you want to do with sustainable investing is not throw out all the principles of investment that we've learned over all these years. We want to have adequate diversification across all the subsectors within real estate, across all the countries that have real estate investment trusts. We want to make sure that our investment program is diversified and is going to give that market rate of return. And then within that, we tilt towards sustainability so that we get both a sustainable and a successful investment experience at the same time. It's not unlike the construction of a value strategy or a small cap strategy. You keep all the investment principles the same, and then you tilt the portfolio in the direction that you want.
Well, thank you for your time today, Sam.
It's great talking to you. Thanks for having me on.